Hello, I'm Maggie Lake. We are here to discuss the state of the global M&A market with Vito Sperduto and Larry Grafstein of RBC Capital Markets. Larry, Vito, 2020, a new year. What's the outlook?
Volumes last year were primarily driven by large cap deals in the U.S. in the first half of the year. And in the second half, you had a significant slowdown there. And as we head into 2020, we're still looking for some of those larger transactions to occur or to come onto the radar. And I also think some of what's going to pull things more to the first half is there's a lot of pent-up demand, both in terms of having financing and cash available to buy, but having held assets that people are intending to sell. And the availability of private capital is at an all-time high. And as a result, you can stay private longer, but you don't stay private forever.
What are you hearing from clients? What is the concern surrounding the election?
The concerns are that there's going to be a change to some of the environment that we have currently. And I think that corporates right now are enjoying the lower tax rates. They've been able to take advantage of it in terms of cash that they've repatriated from overseas at advantageous levels. They have used a significant amount of dollars for stock buybacks. And those are all things that could potentially change in a different administration. And then the other piece is just how does any change in administration or a second term for the current administration impact foreign investment into the U.S.?
So can you pick up on that? I mean, we saw Europe lag in terms of deal activity. I think there's some hope that there would be a resurgence. What are you seeing? What are you expecting?
Well, we saw them really they were off 25% last year in volume. And it really was driven in that first half of the year, they were off 60% plus. I think we're seeing some positive signs this year. There's certainly a lot of global companies that are based out of there that are being extremely active. But at the same time, I think they're still cautious.
But if you were to ask us where there is a lot of pent-up demand, it's probably deals in Europe. Yeah. It's probably maybe even deals within the UK as some of the Brexit uncertainty, drifts away. And it's probably on the private side because there's a lot of opportunities for private companies, private equity firms to put money to work in Europe, sometimes at slightly lower multiples. Yep. And so we kind of have a degree of confidence that is one pocket of future activity.
The U.S. is always going to remain the top market globally. Let's be clear on that. But I do think the European market's going to gain a percentage back. Where the United States was roughly 50% of M&A volume last year, or close to, I think the Europe is going to gain back its position where it was, nudging to a much closer to that level.
And Asia is just more complicated. It's not that there aren't opportunities there, and people who have to think globally clearly have to think of Asia because that's a big factor. But it's a tough investment environment, and it's more complex, which arguably creates more opportunity, but also is a bit of an overhang on overall volume.
As we know, there are potential for trade tensions to bubble up on the European front. There are regulatory issues always, especially when you're talking about technology. They've been more aggressive for years versus the U.S. Do either of those weigh on against some of the pent-up demand or impact the outlook for Europe?
The tech companies have gotten comfortable and used to the regulatory environment in Europe. And they know that if they're doing a transaction, it's going to take longer to get approved. I think on the other front, in terms of some of the prospective tariffs that have been talked about, the question is that reality or not? And you saw some of the rhetoric around tariffs, let's say with Mexico as an example. You certainly saw that quickly backed off. But at the time, the impact was significant because no one had seen this before. We've now seen this playbook. And so I think we understand how to manage it.
What about cross-border deals?
I do see the investment out of Europe into the U.S. increasing, which we saw in the second half of last year as well. I think the issue with U.S.-based companies is that historically, it's something like 85% of the transactions that they did were U.S. on U.S. And so I don't see that changing. I just think there's still greater opportunity from a consolidation perspective in the U.S. or North America versus necessarily looking overseas, unless someone already has a presence in that regard. You look at industries like, let's say, healthcare, which have been global industries, and the players there are global players. There have been some larger deals, but it's certainly been a little less in the last few years. In fact, some of the largest players have more trended towards announcing divestitures in the last few months, and so we're expecting that to pick up some flow. But there isn't necessarily a large-scale transaction currently on the horizon that would drive a big pickup in cross-border activity.